So why are markets still going up? It doesn't necessarily make sense because, like the whole world is shut down right now. The economy has come to a screeching halt, yet somehow, according to the stock market, everything's all good. We're just heading higher from here. So a lot of people think that, it doesn't make any sense that the market is going up. So the only answer must be that it's rigged. So let's talk about that in this video. And by the end of this video, you might be a lot more angry than you are right now about markets, but we got a solution for you too. And when a solution makes money, you're not as mad anymore. Well, maybe. Once you see the solution, you can decide for yourself. But as always, before we start, I gotta remind you of our explosive stocks checklist, just in case you're one of the few people who don't have it yet. I mean, it's free. What are you doing? Don't you want to be cool? Don't you want to make money, man? Be cool. Get this checklist that teaches you how to find stocks that are exploding higher. There's a link down below in the description and comments. Definitely do that. Simplifies a lot of things for you. So when people say that the stock market and the economy are rigged, I don't disagree with them per se, because there's just so many things that you could point to. For example, central bank intervention. We got Jerry Powell over here acting like Thanos, just snapping everything away. Oh, you got some deteriorating debt, some fallen angels, some struggling municipalities, problems with your spouse? Well, Jerry's just like, I could snap my fingers and you would all cease to exist. Which is a terrible Thanos impression, I know, but the point remains. Powell's out here just snapping and dancing, just doing this, getting rid of everything. I imagine it's probably more like this, but who knows? Jerry, he's not bad. He's a good dancer. Any problems you got, Jerry's gonna solve it by throwing money at it. QE till infinity, that's the strategy now. And of course, before QE, we always had interest rate manipulation, because who doesn't like low interest rates to the point where all money is pretty much free? So companies see that, and of course, they're gonna get into ridiculous excess. And my favorite example, of course, is all the VC-fueled BS companies that never actually try to make money. No, that's not the point. The point is to use all that money that came from the low interest rates and all the free money floating around and pile it into growth. And how do you grow? You just buy it. So all of a sudden you got this big company with an unprofitable business model, but they don't care and no one else cares either because they're just trying to get sold. And then the big little guy gets swallowed by an even bigger guy, and then they worry about profits at some point. I don't know. It's just like a hot potato passing this thing from one bag holder to the next. But the potato is actually a piece of crap and everyone is worshiping it like it's some type of gold. Just sniffing it like, oh, growth. Oh, this scooter idea is gonna change the world. And then you got the smart business owners, doing the right things, looking at them like, what are you guys doing? Mass delusions, that's what it is. And then if you want some more manipulation, you could look at just all the stock buybacks that we've had over the last 10 years. Studies have shown that a lot of this bull run that we've experienced is because of those buybacks. And where are these companies getting all this money for buybacks? They're struggling so much at this point that they're asking the government for a bailout. So what happened? You bought all of this stock and now you're asking for assistance? So if you're a little guy, an individual, you're supposed to save 6 months worth of your expenses so you could weather through any storm, because the government isn't going to help you. You gotta be responsible. But if you're a company, you could do whatever you want. Just be flippant, throwing money here and there, just lining your own pocket, because the government has your back. Corporate socialism, crony capitalism, it's all the same thing. And then these guys come on CNBC and complain, saying the coronavirus isn't their fault, they should get a bailout. Well, what about everybody else? And I know I rant about this a lot, but every time I think about it, it just makes me mad. It's so stupid. You know how I feel about it. You should just let these idiotic companies fail. Let them pay the cost of what they've done. Let the shareholders be blown out and all the executives. That's the only way you're gonna get some fundamental change, so that through the next cycle, maybe they'll be a little more careful. And again, the message it sends to people is terrible, because you look at that and you're like, what am I even doing? I don't have a chance. The only way you survive is if you've got your fingers in the government. If you're a big, powerful company that's gonna get bailed out no matter what. That's not the American dream. So yeah, you start thinking the economy is rigged. And then if we zoom back in on the stock market again, we got high frequency trading and algorithms that make things look rigged once again. Like when we all moved to free commissions. Well, the way we got those is by these companies selling our order flow. That way these algorithms could front run us and just make money while we get screwed. And then again, because of these algorithms, we're seeing massive volatility in the market, more than normal. You'll notice on the S&P, as soon as it hits a certain level down, it collapses real fast further. And that's because of all those algorithms kicking in. And last but not least, passive investing. Another huge trend over the last bull market. All of a sudden, finding good companies didn't matter anymore. All you had to do was throw it into a low-cost ETF. Investing just wasn't investing anymore. You can't beat the index anyway, right? So you just passively put your money into the market and watch it grow. And it worked because of all these other things that I mentioned fueling this bull market. So yeah, it makes sense to think that markets are rigged. But here's the part that's going to make you more angry. They've actually always been like this. They've always been rigged. This isn't some new thing happening in the last 10, 15 years. Sure, it's a little different because the technology has changed, but at the same time, it's pretty much the same. A lot of your average investors getting screwed. Ben Carlson has a good article about this, how markets have always been rigged, broken, and manipulated. So we like to think that there was some glorious period back in the day where markets weren't rigged. They were completely free and devoid of intervention from forces of either governments, central banks, or investors. Because everyone was a good guy. No one overstepped the bounds of fair play. Why would they do that? But no, there was no glory era. It's always been this bad. Since the equity market started in the 16 and 1700s, there's always been these cycles, these boom-bust cycles that contain greed, excitement, innovation, and bad actors. You get all of it. You can go back to the early days of the London Stock Exchange, where you would find brokers, or stock jobbers as they would call them back then. They would manipulate the market all the time. They'd push around the prices of the smaller companies and just profit off of it. And no one was any wiser. We had multiple railway bubbles in the 1800s. It was the same thing, more manipulation by guys with money. But it never changes because memories are short, so the next generation just falls for the same tricks all over again. And that's still happening now. And back in the day, it was a lot more common for speculators to corner certain segments of the market. And to corner a market, what that means is that you buy up so much of the market that you basically control the price now. Jay Gould did this back in the gold market in the 1800s, which is a crazy story and is called Black Friday. I actually didn't know about this. It was back in 1869. There was a huge panic in the market that almost caused a massive depression, actually, and it was caused by Jay Gould and his partner James Fisk and Abel Corbin, a bunch of investors. So here's the big scheme. Corbin, who was a small-time speculator, was actually married to Jenny Grant, the younger sister of President Grant. So our boys Jay and James got with him after they saw that connection, and they formed the Gold Ring. Oh, what a cool name. And their plan was to corner the gold market and force up the price. So during that time, Ulysses S. Grant, his policy back then was to sell treasury gold at weekly intervals to pay off the national debt. Oh my God, can you imagine? Back when people cared about the national debt and tried to pay it off? So he'd be selling gold to pay off that debt, stabilize the dollar, and boost the economy. And this was after the Civil War, which really hurt the country, so they were not fully restored yet. So Jay and James, or Gould and Fisk, they saw that Corbin's brother-in-law was the president, so of course there's a way to take advantage of that. So Gould got Corbin to introduce him to the president, and their plan was, okay, get comfy with the president so they could get private information about the government's gold policy, and even prevent the sale of gold, and thereby manipulate the market. And it actually worked, and this was a huge scandal. Literally, these guys took advantage of the president. So once Gould and Fisk were friends with President Grant, they got in his head and told him that selling gold would be harmful to Western farmers. And then Grant sent a message to his Secretary of Treasury and told him to stop selling gold because it's going to hurt everything. But at that same time, Gould and Fisk were both buying a bunch of gold. So if gold was being sold all the time by the government in regular intervals, the price was going to be held lower, right? That's a big consistent seller. And if that suddenly stops, then yeah, the price of gold is going to skyrocket. So these two bought up all the gold knowing it was going to stop, and they made a killing. So President Grant, though, eventually found out. So first he told his brother-in-law, okay, sell all your gold. So once his brother-in-law was clear, because, you know, he didn't want to hurt his sister, which is also illegal. That's why this is a whole scandal with everyone doing bad things. But after he got his family out of it, he's like, okay, I'm going to screw these guys. And he released $4 million worth of government gold on one day. So the price of gold plummeted, and it crushed those guys, the gold ring. They crushed their corner on the market. And this whole thing, all their screwing around, caused a huge panic, and the country went back into months of economic turmoil. But they avoided a national depression. And here's the great thing, everyone got off scot-free. Both Gould and Fisk never got charged. And then a government investigation held by Republican James A. Garfield, who was also president. Well, they exonerated President Grant of any illicit involvement in the conspiracy. How's that for manipulation? Can you imagine that happening today? Forget about Russian collusion. This is the stuff that used to happen back in the day. Then during the Civil War, Congress pumped $150 million of cash into the system. Wow. QE. And $150 million was a lot of money at the time. But they were trying to juice the economy and increase inflation. And then the panic of 1907, before there was a Federal Reserve, you know who we had? We had J.P. Morgan. He had to put a bunch of cash into the economy. That way people were confident. Again, more manipulation. One man kept the financial system afloat. Like I said, there was no Federal Reserve back then, but they finally created one after that crisis. In the early 1900s, we had bucket shops. If you've ever read that book, Reminiscences of a Stock Operator, you know what I'm talking about. These weren't the actual exchange. It was just a place you can go to bet on where stock prices were going. You didn't actually own anything, and you can get a bunch of margin. So it was purely trading, but more so gambling. Buffett actually said it wasn't until a book was published in 1924 that people realized you should actually be holding stocks for the long term, and they make a better investment than bonds. That wasn't even a thing before that. Discounted cash flow analysis wasn't a thing. It wasn't even invented until the 1930s. Again, fueling the idea that what were people even doing in the stock market? It's a straight up gambling racket is what it sounds like. Fast forward to the 1970s and the market was dominated by guys like Michael Steinhardt. Now, he was a great trader and his firm was amazing, but they also pushed the bounds of what was legal. One of the ways they made money was by buying large blocks of stock from brokers. And the brokers didn't really know what they were doing because they were still adapting to a more institutionalized investment world. So Michael Steinhardt was the broker before the brokers were actually the broker. So they would buy big blocks from the brokers at a discount because they're buying in bulk, and then they would turn around and sell those same shares at market price for an immediate profit. Brokers getting swindled. And then they would trade in the highly unregulated third markets where transactions weren't reported to the SEC. You know, who knows what they were doing in there? And clearly they were doing something, and they were probably doing something shady because they were huge profit centers for Steinhardt in the 70s. 70s and 80s, we had the Federal Reserve push short-term interest rates up to 20%. And then Greenspan came in and just started cutting every time there was a little smell of trouble. Oh, a whiff of trouble? Well, that's a better word. A smell of trouble? Well, from then we've been cutting and cutting and cutting, and it's our number one tool. So really, since the beginning of markets, they've always been manipulated, either by governments or investors who are willing to push the limits of fair play. It was never just a straight thing where, oh, this is a good company, so it should go higher. Never. It's never been like that. It's never going to be like that. If markets did trade exclusively on fundamentals, then any investor could just go into Yahoo Finance, type in a ticker and be like, oh, these numbers are good, and buy it and be great. There would be no point in trading even. There wouldn't be 6 billion shares traded each day because everyone would just buy the best investments and then occasionally sell the bad ones. But that's not how stock markets work. It's not based off past results or even present circumstances, but it's based off of what investors think will happen in the future. And no one knows what's going to happen in the future, so that's why prices get so crazy. You gotta assume that fundamentals are detached from reality. I know so many people who get so mad when their stock doesn't do well because they're like, how is this possible? It's such a good company. Look at its profits. And I tell them, like, why do you think a company with good profits should go higher? You think this stuff is based off fundamentals? No. It's all emotion. It's all psychology. It's all boom and bust. So you can't get mad when the logical thing isn't working out, because markets aren't logical, because people aren't logical, and people are what make up markets. But fundamentals do matter over the long term. And that's how you can still win in this rigged market. Look at this chart right here, the daily returns of the stock market. The longer you go, eventually you get to 20 years and you'll see 100% positive. You're gonna make money. Because if we ignore all the manipulation for a moment, why is the stock market even there? If we go back to the basics, what's the point? Well, it's a place where corporations can raise capital, right? That's the point of an IPO, so that they can continue to grow and innovate. And then the people who give them that money, that's the investors, their reward is earning a piece of that company, shares and the profits that it produces. So that's still true. So you can complain all you want about the market being rigged, but it doesn't really matter, because even if the market is rigged, your job is still the same. You got to play within those constraints. You can't fight how the market works. But as you can see from that example, if you're a long-term investor, you could still make a lot of money. But there's other advantages that you have too. For example, being a small investor gives you a ton of freedom. You're way more agile. Like, I think Buffett said that he would make so much more money percentage-wise if he was smaller. You run into a lot more problems and you're a lot more restricted as you get bigger and bigger and have more money to manage. And even as an individual investor, if you're investing your own money, you don't have any career risk. You don't have to meet benchmarks each year or otherwise risk getting fired. You don't have to be stuck in just certain investments that your investors allow. In fact, you don't got to deal with clients at all. You're free to just focus on what works. For example, these explosive stocks that I talk about in this checklist, a lot of these that you'll find are in the small cap and micro cap space. And the thing is, a lot of the bigger guys can't invest in these stocks because they have too much capital. These companies are too small. But for a guy like you or me, we could definitely get in and make a killing. And this is a type of strategy that a lot of famous investors have used to make crazy profits, because the space isn't oversaturated and there's no investment banks, there's less reports on them, and people don't know how much value is there. And because these companies are smaller, you could get in and it doesn't take much for other investors to pile in, and all of a sudden the thing is shooting higher because there's not as many shares as a smaller market cap. And these are all the things that we list out in that checklist. This is what you're looking for because it's a place where you as a smaller guy can have an edge. And regardless of if the market is rigged, if the central banks are interfering, if there's some high frequency traders, none of that matters. You can still find your pocket and profit. And that's really the solution to these rigged markets. Play with what you got, because you can still be very, very successful. And again, if you want that checklist to see how we do it, there's a link down below in the description and comments. And if you like this video, smash like and then subscribe, because we got more coming and you don't want to miss it. So subscribe, and I will see you in the next video. Stay fallible out there. Bye.